Let me share with you a story how I went from losing almost all my trades to making over 100,000 a week trading crypto. And you have to keep in mind that over 99% of traders lose money trading and only 1% are profitable. And I would say less than 0.0001% of traders make millions doing it. So I started trading around 8 months ago. I failed for the first 3 months because I followed general technical analysis like most of the traders do. I tried trading breakouts, ascending, descending, triangles, flags, double bottoms, and all other patterns. I can't say I didn't have any success. I had some winning trades, but in the big picture, I was still unprofitable. And I guess most of you, if you try trading, you can relate to this. I just couldn't figure out why it doesn't work for me when I see all influencers posting those charts with the same patterns and allegedly making profits. So what I did next, I took a break for a month, and in the meantime, I started analyzing best performing traders, not influencers, because there's a big difference between being an influencer and actually becoming and being a good trader. So I tried to see how the best traders trade, and obviously it was hard because they don't share their analysis, they don't trade their patterns, they don't share anything because they are not influencers. And in most cases, best traders, they don't even have a social media. So what I used to do, I used to go on a Bybit and Binance leaderboard and try to reverse engineer their trades based on technical analysis. Because on leaderboard, you can see when they enter the position, their size, what coin they are trading, you can see everything. So as soon as I saw a good trader enter a position, I checked the charts and I tried to apply technical analysis to see how they're trading. But to my surprise, non-technical analysis applied to their trades. So it left me confused. How can it be that the best traders doesn't trade on technical analysis? Then I started going deeper into my research. I started watching interviews with the best traders and trying to understand what's the one thing that makes them profitable when most of the traders are not. And I found out the secret. I bet you have seen the movie Big Short.
How big's your short position right now?
When Michael Burry predicted home loan defaults and personally made over 100 million in profits. You see, he haven't looked at the charts, put some lines on, and decided if the chart breaks the support, he's going to short the out of the market. What he did, he analyzed the data about the market, he came up to his own conclusion and executed his plan. In other words, he had an edge over the market. His analysis in this case was an edge over all other traders and hedge funds. And that is the main difference between people who make millions trading and those who end up losing it all. Every single winning trader has their own edge over the market. Edge in the market can be anything starting from more data, better tools, inside information, literally anything that mathematically increases your odds in winning your trades. And you know, there are some traders who are profitable only trading support and resistance, but their edge in the market is experience trading those patterns. They can recognize when the breakouts are false moves and capitalize on their experience. And once I realized that, the next thing I started analyzing is market movements. Why market moves and how markets can be manipulated, who manipulates markets, and so on. And here's what I found out. I found out that crypto markets are heavily manipulated in many different ways, and I'll tell you one of them. You see, the biggest misconception that most traders have is when you open a position, you think that you are making a deal with another trader. In other words, most people think that in order for you to go long on a position, someone has to sell. And in order for you to go short, someone has to buy. And that is true in a concept, but you aren't buying when some other trader sells, or you sell when someone else buys, because then market would be illiquid. As an example, if you wanted to go long on a Bitcoin right now, but there wouldn't be any sellers, you could not open your position. So for everyone to trade at any given time, someone has to provide liquidity to the market. And I found out who does. There are companies for that, and the name given to liquidity providers is market makers. Let me reveal what else I found out. So let's say market maker sits on 100 million capital that they are willing to provide for liquidity. So whenever you decide to go long on a Bitcoin for, let's say, 10,000, market maker opens a short position of the same size to provide you liquidity to open your trade at any given time, and vice versa. If you open a short position of 10,000, then market maker opens a long position of the same size to provide you liquidity. And once I realized that, it was a game changer for me, because then I started studying how they make money, what is profitable to them. If you think about it, market makers wouldn't make any profits if all traders would be profitable. So it makes sense why such things as fake outs exist, liquidity grabs, and why market moves in a way that it does. Just for a second, imagine you are a market maker and obviously you need to make money. So what would you do? You obviously would try to hit stop losses, liquidate people so you would make money. So in the end, I learned how to take advantage of market makers, trade together with them instead of being liquidated by them. And honestly, since then, my winning rate and profitability as a trader greatly improved. And that's how I was able to make over $100,000 a week and rank as a top trader on Bybit with less than 8 months of experience. And if you found this video helpful, make sure you subscribe to my channel. And if you want to learn more about crypto trading, then make sure you join my private Discord where I share my trades, analysis, and systems that I use for trading. You can find the link down below in the description.